Bring it in, folks. Great to be here today. Monday afternoon. What are we today? October 26th. I'm pretty pumped for our guest today. We were chatting just before the show here, and I must say this is the first time on my show that I get a guest like this. Really remarkable story. You're going to want to tune into this one. As a reminder, guys, I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. The guy we're having on the show today is going to tell the story of how he lost $2.5 million live during a live stream on his own YouTube channel due to a crypto hack. I don't really want to bring it up because it's probably a bit of a sore spot, but the guy's done really well for himself through the multiple businesses that he's got, founder of many different companies that have proven to be wildly successful. He is the CEO of Token Metrics. Let's bring him in right now. Ian Balina. Ian, great to have you on the show today.
Thank you. Pleasure to be here.
Right on. And thanks for coming here. You're joining us live from Washington, D.C. Those of you that are watching on YouTube, Instagram, Twitter, Facebook, or LinkedIn, please take a sec to subscribe, to like. We'd love to hear your thoughts. If you're out there, you're watching, you got some crypto questions for Ian, please put them in the chat, put them in the comments, put them wherever you're watching. We will try to get to any and all questions right here on the show. Ian, you're the crypto guy, you're a crypto guru. I read a bunch of websites that referred to you as a guru. Probably don't like the term guru because, you know what, it's kind of more than that in the crypto space. You've provided information for a long time. You've kind of called the entire rally here with respect to Bitcoin and crypto as a whole over the last, 3-4 years, I guess. Maybe start with how you got your start in the crypto space for me. I know you were, I understand you were born in Uganda and you kind of came over to the US as an 8-year-old, I think. Tell me what that was like and how you ended up in the crypto space.
So, I was born in Kampala, Uganda, came to America when I was 8 years old. My dad went to Penn State, went there to pursue his doctorate degree, brought the whole family here. Once we came to America, we just fell in love with America and just chose to stay here. I always had a passion for computers, for technology, ended up becoming a computer engineering major at school, got my bachelor's and master's in that. And after that, went to work for Deloitte Consulting for a bit, then went to IBM. While working at IBM Watson, I just fell in love with working with data. I was part of the IBM Watson Analytics team, helping non-technical people leverage the power of AI, IBM Watson. So working with sales, marketing, sales departments. And from there, I realized that AI was the future. Artificial intelligence was really going to change lives. Because before then, I thought AI was for developers, for really technical people. But I was able to just see how quickly it could impact lives. I even got featured in the Wall Street Journal for using my IBM Watson Analytics to predict my March Madness bracket for basketball. And that's when I said, okay, you know what? AI can be applied in so many different capacities. So fast forward, I was in the crypto space. I got into crypto. A friend of mine from DC back in my college days came to me and said, hey, Ian, IBM is doing lots of great things with blockchain. Can you put me in touch with the IBM director for blockchain? Even though I was in a different department, I said, why do you care about blockchain and IBM? So he told me he was a Bitcoin developer and he was investing in Bitcoin. And that just kind of blew my mind because back then I thought, this was 2016. I thought Bitcoin was for nefarious characters, dark markets, Silk Road, drug dealers. I didn't even think you could invest in Bitcoin. So when he told me that, I asked him, okay, how much money are you making investing in Bitcoin? And he told me he's making 200% just holding Bitcoin and Ethereum. And that just kind of blew my mind because I was trading and investing in the markets and the 20% return was great. So for somebody my age to be doing that, and then he told me he was launching a crypto fund. And I said, you're in your 20s, my age, launching a hedge fund for crypto? And I just knew I had to go down this rabbit hole. And I did just that. So I went down the rabbit hole, learned more about the space. I just kind of put my feet in. So I bought my first Bitcoin, my first Ethereum. Bitcoin was at around $850. Ethereum was around $9. And it was only just $100. Went to Coinbase.com, put in $100 into Bitcoin, $100 into Ether, and just kind of began learning. I got 2 books. The books I recommend to anybody out there are Digital Gold and The Age of Cryptocurrency. 2 books. One is by a New York Times writer. The other is by a Wall Street Journal writer. And once I read through those books, I fully understood the history of Bitcoin, of cryptocurrencies, the space, and where it was going. And then fast forward to beginning of 2017, after my first commission check from IBM sales, I went all into crypto. I began to dollar cost average into crypto. And the rest is kind of history, because once I began investing and I began to really research cryptocurrencies, I always told myself, as an investor or trader, you have to find your edge. And my edge was working with data and analytics. And I said, okay, let me just look at the numbers. And I became famous in this. Go ahead.
No, I was going to say, you basically said, I'm going to use the same data I used to build my March Madness bracket, and I'm going to apply that data to crypto.
Yeah. So basically did that. And because my last year in IBM, I was part of the IBM open source analytics team. So I was covering all of North America for retail and travel industry. And I just really liked things that were open source. And crypto is all about open source technologies, open source finance. And I said, okay, let me take my spreadsheet and everything I was crunching, and I made that publicly available online, where it was basically this Moneyball approach to investing in cryptocurrencies. And it was open source. People could see my trade, my thesis, how I'd go through and rate these cryptocurrencies. And people saw me take about 20 grand over about 1 year and turn that to over $5 million using this approach. And because everything was so transparent and so just open and out there, it was something that kind of went viral in the crypto world.
Yeah, so you're sharing your actual trades, you're sharing your logic behind your trade. You're saying, here's why I'm doing this. I believe this is going here. You post that, you tweet it, you linked it, you Instagrammed it, you had your YouTube channel, and then people could actually see the numbers that you were making. And you got that to 5 mil. And you had you still do, but that's how you started to get your following on crypto, right?
Yeah, because it was something
showing what you're doing.
Yeah, by showing people, by being fully transparent, by having basically my entire trading book and spreadsheet open to the entire world. Because initially it was just something for others to use for their own research, but people just liked seeing what I was doing, even though I was relatively unknown when I joined the space. But just by having the success and then having the open source spreadsheet to back that up, that kind of built the fame. And then, as you mentioned earlier, this was 2018, live on a YouTube live stream to my audience. I got hacked.
Man, this story is unbelievable. This is probably one of the greatest. Not greatest for you, but it's probably one of the most sensational moments in YouTube history. Someone getting hacked live during their own YouTube broadcast. Man, tell me how that happened. Tell us how that happened.
Yeah, so I was doing a live stream. It was around midnight at night, because typically I do my live streams very late after working and everything. And live on the air, on my spreadsheet, I noticed that I couldn't log in. And prior to that, about 15 minutes into the live stream, somebody had commented in the comments that, hey, Ian, you're getting hacked. We see funds moving in your wallet, because one of the things of crypto and blockchain, everything is out there on the blockchain. So because I built up a big name, people began to put alerts on my wallets so that whenever I would make trades, they could see everything happening on the blockchain. And once I saw those comments, I said, somebody's just trying to troll me. But once I couldn't log into my Google Gmail account, I realized, okay, something is wrong here. I abruptly ended the live stream and went to check my accounts. And I saw that I was kicked out of my Gmail account. And because my spreadsheet was on Sheets, I didn't have access to anything. So I said, oh, wow, looks like I really did get hacked. So I go and check my wallets on the blockchain, on my addresses, and funds were actually moving. And that's when I kind of just froze in my tracks, grabbed my computer, went upstairs to my bedroom, locked the door, and said, this is really happening. And it was one of those moments where, I basically knew, being in crypto, that once you lose funds, it's very difficult to get them back, because there isn't a refund button in crypto or blockchain. One of the value adds of it is that it's immutable, right? Once funds are transferred, they're transferred. So I was kind of on the other end of that interaction. But then I also realized that even though this could be something that could change me forever, I told myself there's no way I would let that happen, because if anything, I believe that I could bounce back from this, because I looked at everything I had done, and it wasn't just by dumb luck. Obviously there's luck in investing in it as well, but I knew that I had a system to making money, and I knew that this process was repeatable. So if anything, I just viewed this as an opportunity, as a challenge, because I knew the hackers were trying to hack me to kill and break my spirit. And
they knew you had money too, right? I guess.
Well, that too, but the fact that they timed it on the live stream, right? They wanted to kind of have this entertainment factor, which they did, but to also just kind of kill my spirit. And just kind of my personality, I always view adversity as a chance to bounce back, right? And ended up doing just that. So for the last few years, I've still been in the crypto space, been able to make the money back. The good thing I can say is we ended up opening up an investigation with the FBI, and we caught the hackers. So they're currently facing trial, thanks to the help of the FBI and the DOJ, and they'll be facing trial pretty soon.
So they did that. Oh, I missed that part of the story. They did it to spite you. They did it live during a show just to spite you and to upset you.
Yeah,
because they could have done it. They could have done it overnight, and you wouldn't have known until the morning. But they were like, "We got access to this, so we're going to change his password during his show. We're going to do this during his show."
Yeah. So the other part of the story is, turns out they actually had hacked me a while back, right? They had hacked me and lots of other investors in my network. So they kind of like having the fox in the hen house. But they were watching me for about a few months. And it wasn't until that live stream, because on that live stream, I told my audience, hey, you've seen me build my portfolio transparently, but now it's getting too big to a point where I can't keep doing this publicly because I'm becoming a target and I'm beginning to move markets with my influence, right? So on that live stream is when I said I was going to take down my spreadsheet. And I think they kind of viewed that as the time to execute on their hack.
Huh. So, I mean, I remember one time I left my wallet on the table and I had $200 cash in there, and they left the wallet, but they took my cash. And I remember how devastated I was for that. 2.5 million, I imagine, is significantly more devastating than $200.
Yeah, I mean, it was devastating because I was planning to use part of that money to buy my parents a home, right? We had picked everything out and everything. So that definitely did hamper that dream I had. But I mean, in kind of a crazy way, I had made the money so fast, I didn't really comprehend like how hard it would be to make the money back, right? Because when you turn 20 grand to 5 million in like 9 months or like 12 months, you're thinking, okay, yes, this is pretty bad, but because I come from very humble beginnings in Uganda, I just said, okay, this sucks, but I just have to make this money back in 1 year. Right, that's kind of the mindset I had. Right, so just like if I just do what I did again for 1 more year, I can make it back. But also at the same time, I had become a very big name in the space, right? And I've gone full time into crypto, and I was getting lots of different business opportunities, right? Where I knew that the money was gone, and getting angry couldn't really bring it back. The only thing I could really do was just work with the FBI investigators. Have them try to just find justice and have these people pay for their crime, but also just kind of go all into business and just try to make the money back. And I was able to make the money back in basically about half a year.
Half a year, wow. Those of you that know me, viewers that have been following me for a while, they'll know that in December 2017, I went on the Business News Network, which is the BNN here in Canada. And I pounded the table and I said, Bitcoin was at 19,000, I think. And I said, trust me, guys, this is a bubble. It's going to crash. You should not have this in your portfolio. You need to sell now. You need to take your profits. And I was extremely adamant about that fact. And I mean, back then, my view was that, crypto itself wasn't really a thing, and it was a fad, and it was a fringe thing, and it was, blockchain was, nobody understood it, and the lack of regulations around crypto was seriously problematic. And I mean, short term, I ended up being right. Obviously, it did crash quite a bit. I think it went down to 4,000 or something like that, 4,000 or 5,000. But the reason I'm on here today chatting with you about crypto is my view, probably like a lot of Canadians and Americans and people around the planet, has changed with respect to crypto. And I think one of the concerns I had is that the market was really, really unstable, and there was no way that you could actually assure that it was a fully transparent and fair market. Now, has that changed in your mind?
Yes, yeah. So the space has definitely cleaned up ever since 2017 and also 2018 in general. So the 2-year bear market has cleaned up the space, also thanks to regulators. So the SEC, CFTC, they've been very, very active. I mean, almost to a point where they've forced lots of American entrepreneurs or just entrepreneurs in other jurisdictions to go offshore into other jurisdictions. But also, I think the space as a whole, people are getting smarter. People have seen all the different scams in the space. They've kind of seen what to do and what not to do, right? So I think the space is getting a lot better, especially also when it comes to liquidity, right? There are just so many different options in terms of exchanges, in terms of DEXs, in terms of how to store your assets, how to protect yourself. And I think that happens with every nascent industry, right? Over time, people just kind of self-police, self-regulate, and also with the help of regulation as well.
Yeah. So the SRO, is there an SRO that exists? Is there a self-regulatory body that exists?
There's one that was formed by some crypto companies, but it hasn't really received anything. It's still pretty brand new. They are in the process of trying to speak with regulators and trying to kind of create their own FINRA for the space, but it's very, very early.
Because that would be a big jump. That'd be a huge leap if you could get that. I mean, I talked to you about hacks. I talked to you before the show about one of my concerns back in the day with the centralized exchanges. You know what? Maybe before we could kind of take a second, you could tell us the difference between these centralized exchange and these decentralized exchange, the CEX and the DEX, and how different it is for people to hold their crypto on those two different sites, or two different ways, I should say.
Sure. So a centralized exchange means that somebody else has custody of your funds. So this is similar to using an E-Trade, a Charles Schwab, a Goldman Sachs. Somebody else has your actual cryptocurrency. So those have the most liquidity. They also have lots of users on. They have lots of, I would say, just trust in the community, because they have lots of technology, especially the big ones. Biggest ones are Coinbase, Gemini, Binance, Kraken, all those big ones. Your funds are pretty secure. And if they do get hacked, they typically do have ways to recover funds, right? So for example, Binance got hacked a while back, and they had an insurance fund. So that kind of gives people more confidence that, hey, if something would happen to me or to my crypto, this company could basically pay me back. Now, that's not been fully tested with large amounts of capital, because exchanges could say that. But for example, this year, an exchange called KuCoin, they recently got hacked for $150 million. Now, they claim they had an insurance fund, but if we're talking about like $1 billion in capital, something like that probably cannot be recovered. Then you also have DEXs, decentralized exchanges, meaning that you have to custody your own funds. And these are really peer-to-peer exchanges. Think of this as an OTC market. So me and you, as opposed to
OTC, over the counter, yeah, OTC market.
Yeah, over the counter. So as opposed to going to a central exchange or website, you're basically trading directly with people, right? So, but this is happening through smart contracts, right? So the biggest one right now is Uniswap. There's also one called SushiSwap. But basically, you go to a smart contract with a website with no central intermediary. You basically just exchange your tokens. Now, this is now being fully automated through what's now called an automated market maker. So they're basically creating liquidity pools. Sorry to kind of get technical. But
no, this is important. Yeah.
Yeah. So basically creating liquidity pools where you can trade amongst each other. Because the issue with DEXs a while back was there was no liquidity. So what happens is, let's say I want to create a market as an investor. I get two trading pairs. So let's say Ethereum, ETH, and a stablecoin, basically a cryptocurrency backed to an asset such as the US dollar. So let's say DAI or Tether. So let's say I deposit DAI, I deposit 1 million worth of DAI, and using those two pools of capital without having to wait for any buyers or sellers. So basically, it takes the concept of a market maker and makes it something the entire community of investors and traders partakes in.
How does the person who put his $2 million get his actual capital?
So basically, you deposit your funds and you earn a share of the trading fees from this DEX. So let's say it's typically 0.3%, right? So then whenever you want to get out of this, so this concept is called a liquidity pool. So investors pull their funds together and basically become the market maker to create markets on typically new coins, because the space was very brand new and lots of coins had no liquidity. So DEX has created a way for people to pull their funds together and share in market making, basically. And
they're catching up. They're catching up on the liquidity of the centralized exchanges.
Yes, yeah. Actually, to a point where back in August, Uniswap at one point had more liquidity than Coinbase, which was the first
Really?
time in a while. Yeah.
Huh. And I mean, Coinbase is the largest centralized exchange, right?
in the US, yes.
Yes. Okay. So typically someone goes on Coinbase, open an account, put $1 million
yeah.
USD, then you buy whatever you want. There's an exchange, there's a bid, there's an ask, there's a spread, there's an actual depth of the market. It's just like buying stocks, correct?
Correct. Right.
Large,
but it's a hassle to open. But because crypto is all about open finance with a DEX like Uniswap, no account creation. You just go there, plug in your crypto wallet, typically through a hardware wallet nowadays, or just even
through a what,
software
sir?
wallet. Hardware wallet.
Okay, yeah.
Hardware or software wallet.
Okay.
So the typical wallets people use is called MetaMask. It's basically a wallet inside your browser, and that just basically pulls in your account, basically your wallet addresses, and you can begin trading instantly without having to go through all the different hassles. So in a way, it is kind of like the wild west, because there is no KYC AML, but regulators haven't yet made any stance on that, but likely they will in the future. And I would think once that happens, there'll be more guidance. But that's what happens, because now people can begin building on top of these DEXs. So now people are creating futures DEXs, they're creating derivatives DEXs, and this becomes a lot easier for anybody, because now people can. So the term in DeFi is called composability. DeFi being
what is it called?
Composability, basically kind of like Legos. So being able to take different protocols, different projects, and put them together and come up with something even new, something that people didn't really have before. So that's what's happening in this space, right? So for example, now people are beginning to create forms of earning interest on cryptocurrencies. This concept is called yield farming. So being able to deposit, let's say, your cryptocurrency, lend it out, and have it all being fully automated through different DEXs, and then having the funds returned to you. So it's a very fast-moving space. I mean, even myself, just trying to keep up with it every month, every day, is pretty challenging. But DeFi and DEXs have been essentially blowing up to a point where even Coinbase invested in a DEX, right? So these centralized exchanges are now beginning to become early investors in these promising new projects or exchanges as a way to kind of hedge themselves.
I'm here with Ian Balina, CEO of Token Metrics. I'm Rob Tatro. Remember to subscribe if you're watching on YouTube or Facebook or LinkedIn or Twitter or Instagram. Wherever you're watching, please like and subscribe. And if ever you want to book a no obligation consultation with us, go to www.speaktorob.com. Happy to have a chat with you about how crypto could fit in your portfolio, if you should have any, what that should look like, or what you should own. I must admit, I'm not a crazy crypto bull, but I am seeing kind of the light of adding crypto to portfolio. So I asked you earlier off stage, this pretend stage that we have, what kind of asset allocation do you think would make sense? First of all, do you think everyone in America or North America should own crypto?
Yes, absolutely.
What percentage do you think? Sorry, go ahead.
Yeah, I think everyone should own a piece of cryptocurrency, whether that's Bitcoin or others, but most people end up buying Bitcoin first, because regardless of what you think, this is the future of money. So it's basically, the question is, do you want to get left behind? That's kind of the way people in crypto view it, because we think at minimum, obviously it's different for everybody, but in my opinion, at minimum, everyone should own at least 1% of their net worth or portfolio in Bitcoin.
Now, would that be their liquid net worth or their balance sheet, their total balance sheet?
I would say balance sheet, right? Okay. But depends for everyone. But I think everyone should have at least 1% in Bitcoin, right? Because think of it as just a hedge against hyperinflation, inflation, whether in the U.S., whether globally, but in my opinion, I think the future of money has to be disrupted. Right now, money is archaic to a point where even the IMF, I believe last week, had a emergency meeting where they're basically looking at possibly having all these central banks create their own digital currencies. So China's doing it. China's all in on trying to disrupt the U.S. as the world's reserve currency, and really trying to get away from just being held hostage by the U.S. Then on the other hand, you also have America looking into creating their own digital dollar. This was something that was even in the last pandemic bill, but they had to pull it out because it wasn't ready yet. But almost every central bank wants to go this route. And this is really the biggest thing that can make people bullish in crypto and Bitcoin, because let's say there's a US dollar that's now digital, where they can tax you in real time on every spend of the dollar. Whether you're out there at a restaurant, you're buying something online, they can tax you in real time. They can monitor everything, and the entire world's economy goes completely cashless. This will be heaven for central banks, which is definitely fair. However, there's part of the population that doesn't want to see central banks or central governments, whether they're corrupt or what have you, have full control of money like this. And Bitcoin is a hedge towards that. Bitcoin is basically achieving the same thing, but it's something that's not really owned by anybody. It's fully decentralized. It has no central bank, no central government controlling it. People can't just seize your assets. So this is really a hedge for the future, right? So whether you're bullish on Bitcoin or whether you're not, digital currencies are coming. Cryptocurrencies are coming. They're coming in China. They're coming in the US. And imagine if the entire world becomes educated on cryptocurrencies. There will be a natural progression for them to look at Bitcoin. Even Facebook is planning to launch its own cryptocurrency. They've been going through some issues with regulators around the world, but that's also forcing them to now speed up development of their own cryptocurrencies.
Yeah, so let's talk about that real quick. And I mean, I know that the crypto guys and gals that are big believers, they believe that this is taking over the world, and you guys believe that this is taking over the world. So, I mean, for you guys, 1% would be a joke, but I think for everyone else, like 1% would be an extremely small move in their portfolio, and something that I think is probably palatable for most North Americans. 1%. We're not talking about 10 or 50 or 100. So if you got $1 million, you put $10,000 into crypto. I mean, it's certainly not. You're one of the most, I guess, tame opinions when it comes to this, because I've heard people tell me, the crypto bulls, that you should have 50% of your portfolio in crypto, and I think most people would disagrry. So let's talk about stablecoin, or a stablecoin, as I understand it, is a crypto that's kind of pegged to a currency, or pegged to a. Am I right on that? It's pegged to a fiat currency.
Yes.
Okay.
Not always. Yeah. Well, I'll say typically fiat currency, right? So, for example, you have the biggest stablecoin right now is Tether. That's pegged to the US dollar. So the reason for this is traders who want to move in and out of trades, or people who want to have exposure to the US dollar without having to own physical dollars. So still being able to own a cryptocurrency. Right?
Okay. So how does it perform relative? Sorry. And it trades on a secondary market as well, right?
Yes.
Tether?
Right. So Tether is available on exchanges. It's also available on DeFi exchanges, DEXs. So being able to buy a cryptocurrency that has the same characteristics of a cryptocurrency, but is pegged to the dollar. So meaning that, let's say you're concerned Bitcoin's about to crash, but you don't want to cash out to a fiat bank. You want to keep your funds in crypto, or let's say you want to transfer money worldwide from, let's say, America to, Australia. As opposed to doing a wire transfer that could take a day or so, you could just take your Bitcoin, cash out to Tether, wire that money to somebody, and he'll have those funds in 20 minutes, right? So that's kind of the use case of Tether. But I would say it's mainly used by speculators or traders, or people who just want to hedge and get out of volatile markets in crypto.
Okay. And now it's not going to be volatile, right? It's going to be pegged to the US dollar, so it doesn't move much, right?
Yeah. Okay. So it basically fluctuates between about 99 cents to $1.01, maybe $1.02. Now, on occasion, there is volatility if there's lots of, I would say, just concern. So, for example, panic. So, typically with Tether, this is done by an exchange called Bitfinex. They have physical custody of a one-to-one match of all the Tether ever minted or created. So, if they have, let's say, 10 billion Tether, they should have that same amount of capital locked up in the bank. Now, there have been issues, and I'll say just also cases where now they're being investigated by some regulators where they didn't have the exact money they claim to have in the bank, right? So that's why Tether, even though it has the most liquidity, people aren't parking their life savings in it long term, right? Because at one point in time, I think they only had about 80 to 85% of what they claimed, because the company would borrow funds from what they had in the bank. And as a result of that, Tether is now mainly used by traders who only want to put funds in there to get in and out of a trade. Now, you also have other stablecoins out there. For example, Facebook Libra is doing the same thing, but it's a basket of other currencies. So it will be the dollar, the euro, and the yen, other different global currencies as a basket, as a way to kind of hedge.
But why did Facebook's Libra fail? Like, why did that one fail? Well, it sounds good on paper. Like, it seems to make sense to me.
Well, it hasn't failed. The technology is great. They're definitely very innovative. But because it was Facebook, regulators just came out of the woodworks and just had a bunch of paperwork. And I've just been asking questions and questions and questions to a point where lots of their early partners had to get out. So PayPal and some others got out. But Facebook Libra, in its initial form, because of the I would say just the passion of regulators trying to kill it, because they saw that this was really going to disrupt everything. Because now anybody worldwide who has Facebook, who has Instagram, who has WhatsApp, could send money. And people were concerned with Facebook becoming the world's bank, because Facebook is trying to catch up with WeChat. In China, people use WeChat to make payments for everything. And Facebook is trying to catch up with them by creating their own cryptocurrency. And that was very concerning because of Facebook's history with privacy and data.
Okay, so the most recent announcement I saw, I think it was last week, was it PayPal? I think it was PayPal that they're now
in the game as well.
They're in the game. So what was that news? They're now accepting, and are you able to transfer through PayPal as well?
Not currently, but soon. So PayPal will now let people buy and sell, and also merchants accept crypto. So accepting Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. So 4 cryptocurrencies. The only, I guess, asterisk is that you can buy and sell, or basically deposit and money on PayPal, but you can't move it out of PayPal. Meaning that you can buy Bitcoin on PayPal and sell it on PayPal in one account, but you can't transfer that to somebody else's account. So people are saying this is really their approach to crawl before they can walk and run. But it's also really a way to make sure new people getting into crypto, buying crypto on PayPal, are keeping things secure, so less likely to get hacked if you can't transfer funds out of your PayPal Bitcoin address.
Simplifying the game, I would imagine, and just trying to expand the reach is what it sounded like to me, right? Simplifying the game, make it easier. Because let's be serious. Like, crypto is a confusing topic. You know it inside out. You spent your whole life, every waking moment for the last 3 years studying, looking at charts, understanding crypto. But like, for someone who doesn't understand cryptocurrency, like, what the heck is it, and why am I investing in this, and how is this going to replace a dollar? What would your kind of 30-second pitch to that person be as to why you think cryptocurrency makes sense long-term for our society?
Yeah, so I would say cryptocurrencies are a way for people to transact online digitally without having trust. So the blockchain basically created this, being able to send money worldwide without having a central bank, central authority, middleman who's basically taking commission and basically rent seeking. But most important of all, crypto is helpful in emerging markets, in places where people have had corrupt governments, corrupt banks. If you go to Lebanon, people are not able to withdraw funds from the ATMs. People's wealth is basically being taken from them. So now people can become their own bank. People, as opposed to having a bank forced upon them based on where they live, they can become their own bank and save from and basically save their wealth, get out of hyperinflation, and being able to just build wealth globally and become part of the new economy.
Okay. And remind the viewers how these cryptocurrencies are created.
Yeah. So there's
no central bank. Who's printing the money?
Good question. So cryptocurrencies are made through software. Everything is made through code. But it's also what makes it very unique, because now anybody in the world can go and view the code. It's open source. They can go through and audit the code and see if there are any issues, right? So with Bitcoin, there are only 21 million Bitcoin that can ever be mined. And right now there are about 18.5 million or so Bitcoin. So
it's kind of got a half-life, right? Every year they make half as many as the year before. Yeah.
Yes. Yeah. So, right. So all of this is now publicly available for anybody to audit. So imagine if the Federal Reserve Bank or any other central bank, if the way they made money was finite, meaning that they can't just infinitely print money whenever they feel like it, and everything is basically structured out in a manner where the entire world can see what's happening. And that's what cryptocurrencies are. Now, yes, there are some cryptocurrencies where there is an infinite supply, but all that is publicly available and it's open source. And I think the element of open source and also bringing this to finance, creating a new form of finance, a new form of money that's fully open, fully transparent. So similar to my spreadsheet I mentioned earlier, this is the entire ethos of crypto, because now anybody can build applications on top of this new form of money, because money has to get disrupted. That's kind of most people's view in crypto. And the banking industry, finance, has been one of the last industries to not get disrupted by technology. And by really creating a more level playing field, more people can become part of this new global economy.
For me, it's really, really interesting. I'm certainly not a believer that there won't be banks in 5 years. Definitely, I do think they're there to stay, but I do think there is a place for crypto. The risk is what I kept fearing back in 2017 when I was pounding the table and saying this thing is going to blow. This is a bubble. This is not a currency you can't replace if you don't have someone overseeing. There's no rules. There's no regulation. People are getting their laptop hacked and they're losing hundreds of thousands of dollars. I thought it couldn't be done. We talked about this earlier in the show, but the security around that, the exchanges have come a long way. Hey, I want to ask you about the coins that you consider invest. Actually, first transaction on Bitcoin, what was it? 10,000 Bitcoins for like a pizza or something like that. Am I right on that?
Pizza? Yes.
Yeah. 10,000 coin?
Something like that.
Yeah. So what is that? Like 130 million nowadays?
It was a lot of money. The most expensive pizza ever.
Back then, it was the cheapest pizza ever because people thought it was worthless. What are you thinking about? There's a question here from one of our guests, and I want one of our viewers, and I do want to get into some of the coins so everyone knows about Bitcoin. Everyone's heard that one. Some people have heard about Ethereum and some of the other ones. What are some of the other ones that you think might be, breaker outers? And the question here is 3IQ, Canadian crypto. I don't know if you could see the question at the bottom.
Okay. Yes, so I can see that. So I've not heard of that cryptocurrency, but I would say in general, the very quick way to go through and see if a cryptocurrency is worth investing in is just go see the project on CoinMarketCap and see, does it have liquidity, right? So is there liquidity in the project, meaning that lots of cryptocurrencies, if you get into them, you basically get trapped, right? So we like to find projects where the daily trading volume is higher. Hello, man. Excuse me.
Yeah, do you need a sec? Yeah, you take a sec.
Sorry about that.
And I think he's talked about liquidity, which is one of the things that we look forward to a lot when we invest in any type of investments. Stocks, private debt, real estate, bonds, you name it, alternatives. You want liquidity in the market. You want to be able to get your capital out. So if you buy Amazon stock today on the market, you can get your money out a second later, a minute later, an hour later, a day later. It's what makes, the stock markets, the most efficient and liquid market, on the planet. So you're talking about now liquidity when it comes to crypto.
Yes, right. So because in crypto, you have lots of new coins that launch. They're new, they're shiny, they're sexy. People FOMO into them. Then after a while, something happens and liquidity just dries up super fast. Right? You basically wake up one day and there's no liquidity. Right? So
liquidity for the viewers would mean there is no one willing to buy that coin from you. There's no bid, as we call it in our world.
Yeah, and this happens especially on DEXs. Right, that's kind of the downside of DEXs. So, for example, going back to the concept of a liquidity pool, imagine one big whale investor, let's say a hedge fund. They create an initial market. They deposit, let's say, 5-10 million on either pair. People come and trade that. They have it there for some time. Then one day they wake up and say, you know what? We're done creating a market for this. Let's take our capital and go. Now, unless other people have been putting capital into this liquidity pool, the capital could just dry up overnight, right? And this concept is called a rug pull. Basically, someone just pulls the rug underneath you, and this is more common. Yeah. So this concept is more common on DEXs. On centralized exchanges, this rarely happens because most exchanges also have their own internal market makers who provide liquidity as well. So with new coins, that's the biggest concern. I'll say that's probably the biggest risk. First, making sure there's liquidity. So we try to find liquidity. So we try to find projects with liquidity between 10 to 50% of this market cap. So if a project has a market cap of 100 million, we would expect liquidity of 10 million or more a day. If it has
Per
less
day.
than that, per day.
And
right?
would you add both the centralized exchanges and the DEXs?
Yes, yeah. So total liquidity.
Okay, on both.
Right?
And most of the volume now is happening on the centralized exchange still, right?
Yeah, still. Right. So that's the first thing I check for before even looking at the fundamentals of a project. If it's trading, is there liquidity? Then the next thing I would look for is the background of the team. So is the team known? Is the team or is the team anonymous? If it's well known, has great history, track record, for example, if they came from Amazon, Google, Facebook, if they've worked on past blockchain projects, if they were developers at Bitcoin or Ethereum, that gives more trust to the project. And then looking at the actual code as well. So in cryptocurrencies, lots of cryptocurrencies can just clone other projects. So making sure that there's actual innovation happening, the code is secure, it's gone through multiple audits through third-party companies, meaning that they've gone through the code and didn't find any bugs in the code. So this gives more reassurance to investors and traders.
So this would be like, me doing my due diligence on an investment. I'd want to make sure I spoke to management. I understand. I've looked at the balance sheets. This is a good project. This is a good real estate project where we want to invest in this. You're doing the same thing with the code, with the management, and the actual, and the project itself. So I always thought that crypto was a commodity. Like you and I could create a crypto today, and these two people could create one tomorrow, and they're the exact same thing. It's just which ones people buy more of. But that's not the case, because the code behind these crypto, how often there's new coins released, that entire process is something that does make it a valuable or a less valuable currency, right?
So I would say the two most fundamental elements for cryptocurrencies are the community. So two projects could have the same exact code. One could be a clone of the other. But if the other has 10 times, for example, take Bitcoin and Litecoin. Litecoin is basically the same exact clone of Bitcoin, except for changing a few parameters in the code, meaning that Litecoin is meant to be the silver to Bitcoin being gold. But Bitcoin has a much bigger community because it had first mover advantage. It has more developers innovating on it, and just has a wider acceptance amongst investors and traders and just people in the entire space. Now, let's say, for example, two cryptocurrencies that launched recently, Uniswap, which is the biggest DEX at the moment. Somebody took the entire code, which was open source, forked it, and called it SushiSwap. So this kind of became famous and is now called the protocol wars. And because Uniswap initially had no token, and people in the crypto space just really love tokens and just making money. So somebody took the entire open source code, launched a competing DEX, and made his own cryptocurrency, his own token. And at one point, and then they would also incentivize market makers from Uniswap to transition over to their new DEX by giving them these tokens. So pretty much almost over a week or so, over a quarter of the liquidity dried up and went over to this new DEX, to a point where Uniswap had to respond by then creating their own token, Uni, right? And so it's very fascinating to kind of see now that liquidity is not really a moat anymore amongst competing projects, but also seeing that any project now has to innovate and come up with ways that other projects can't just take their code and just fork it, meaning cloning, right? And the biggest moat now projects are having is just integration. So basically, if somebody creates a new project, a new cryptocurrency, and then they get basically biz dev, getting other partners, other projects, kind of like the approach I mentioned earlier of Legos. If you get 10 other well-known projects to integrate your project over the other one, then you're basically building a moat that makes it more defensible, right? So it's very tough for somebody to just clone your project if you also have to go out there and do actual biz dev.
Okay, so I read an article in preparation for this chat today that said something like, there's I forget the numbers, but they're not important. But let's say there's 1,000 new projects per year. That 20% of them are going to fail kind of before they're even launched. Another 25% are failed kind of in the initial kind of month or two, and another percentage will fail late. And, there's a smaller portion that succeeds. So what would you say to someone who were to tell you, it's way too risky to be investing in some of these because a lot of them are going to go belly up?
Great question. So I would say a typical response is when you're investing in crypto, you have to understand this is a high risk space and only invest what you're willing to lose, right? That's why even though I'm pretty much all in on crypto, and I'm talking to people who are brand new, I say at minimum, only put in 1% of your capital because you have to take baby steps. Even when I got into the space, I mentioned, I didn't just go all in. I began this kind of investing, dollar cost averaging with very small amounts. And initially I was only willing to lose $200. So bought Bitcoin and Ethereum with $200. And as I had more success, learned more about the space, I began to increase the amount I was putting into crypto. So I would say the same approach with anybody out there. Get whether it's if you're only willing to lose $10, hey, put in $10. The cool thing about cryptocurrencies is you can own fractional amounts of crypto. Meaning that you don't have to buy the full amount. You can own a quarter of a Bitcoin. You can own a quarter of Ethereum. You can own 0.0001 of Bitcoin or Ether or any other cryptocurrency. So anybody can begin investing or trading in crypto and just begin with what you're willing to lose and then scale up after you have success.
Okay, and that'd be your recommendation for pretty much anyone. Now, you mentioned some of the characteristics that you look out. You said liquidity, you said management, you mentioned the code. What are some of the sleeper picks that you have now? I mean, I don't know if I know you covered this on your channel, but you talked about the research that you do. Token Metrics is the company that you own, that you founded. Token Metrics looks at these things. Are you able to give us one or two sleepers that you like right now that might not be on the crypto radar?
Yes. So one project is called Polkadot. They're basically building
Polkadot?
Polkadot, kind of like the dot pattern. So they're building an internet of blockchains. This comes from one of the co-founders of Ethereum, and their goal is to get other blockchains and have them talk to each other. So imagine being able to transfer value between Bitcoin and Ethereum with one blockchain. So,
I don't even know what that means, but it sounds cool.
So meaning that imagine you had one blockchain that spoke to every blockchain. So as opposed to having to, so if you're building applications on Bitcoin or Ethereum, you can just build something on Polkadot and everything can happen. Or for example, if you're building a DEX, let's say you want to do what Uniswap is doing, which only happens on Ethereum's blockchain. You can, there's a project called PocoSwap, for example. They're building a cross-chain DEX, basically an exchange running with no middleman, no central authority, that can transfer assets across different blockchains. So it's kind of like, to make it more traditional, it's kind of like Swift Bank for being able to have cross-border payments or international transactions, but everything's happening on different blockchains because different blockchains have different languages. They all can't talk to each other. So if I want to transfer from, typically, if I want to transfer from Bitcoin to Ethereum, I have to go through a central exchange, right? Because they basically kind of act as the translator.
Where's the price at now for Polkadot?
It was under $5, but it's currently in the top 10 market cap, I believe, last time I checked.
Okay. And where do you think it's going in the next 12 months?
I can't give particular price, but we're definitely very bullish on it. We think this could be the next Ethereum, right? If there's any project out there that could dethrone Bitcoin outside of Ethereum, this one is one of those projects. Then one other project I like is called Helium Network. So they're basically building a fully decentralized wireless network for IoT devices. What does that mean? So for example, people who have scooters, like those Lime scooters or Bird scooters in streets, they have to have access to the internet. So Helium is probably one of the easiest projects for anybody to grasp because you buy a hotspot, something that looks like a router, you plug it in, connect that to your internet connection, and you share your connection with the IoT devices. In exchange, they pay you in cryptocurrency. You're basically getting paid in tokens of crypto to share your internet with developers who are building IoT devices.
That I do get, and that's fairly simple. I just worry about the hack possibility, but I'm sure there's a way to try to protect that, I would imagine.
Yeah. So I mean, giving us. Yeah. So data on Helium's blockchain is private, is secure. They kind of go through all that with cryptography.
Yeah. So Polkadot, Helium is the other one. And you mentioned to me before we got on the show that you had a call about Ethereum. Is that a call you want to share with the viewers?
Yeah. So actually, right? Yeah. So the irony is, Bitcoin is great. Bitcoin has great technology right now. But if we had to look into the future, one of my controversial calls in the crypto space is we think Ethereum will dethrone Bitcoin in total market cap. We call this the flipping egg. Basically, we think by 2030, Ethereum will be the world's biggest cryptocurrency. Why is that? Bitcoin is really now becoming a store of value. Basically, Bitcoin is becoming gold. People who want to store their wealth, store their money, they invest in Bitcoin. Ethereum is really building the world's biggest virtual computer, where people can actually create applications running on blockchains. And if you look at all the new coins being created, all the new development activity happening, when developers join the space, almost all of this is happening on Ethereum's blockchain. For example, Uniswap, the biggest DEX, is built on Ethereum's blockchain. DeFi, which is decentralized finance, there's now over $10 billion locked in DeFi, and most of that is happening on Ethereum. So Ethereum just has so much adoption amongst development, amongst investors, and one of our thesis is this: if we take the legacy market, all that money, if that money is to move onto a blockchain, let's say exchanges, trading, synthetics, what have you, all that needs a blockchain that can support that. Bitcoin in its current form cannot support that. Bitcoin is built for one single use case. Ethereum is built for several use cases, and that's mainly building powerful applications that are open. And that's why we think by 2030, Ethereum will surpass Bitcoin in market cap. Because if we take the derivatives market, all that capital, if it's ever to get tokenized, which we think will happen, because the World Economic Forum believes that by 2027, 10% of the world's GDP will be tokenized in crypto. And if that happens, Ethereum right now has the best technology to make that possible, not Bitcoin.
Tokenized. I like that word, tokenized. Hey, before we get to the rapid fire at the end, remind the viewers here, I'm here with Ian Balina, president and founder of Token Metrics, a crypto guru, as some would call him, as I'm calling him. I want to run some quick questions by you. What's the last book you've read? You gave us a couple of books you really liked. What's on your shelf right now? What's on your night table?
For crypto?
Just any book.
Oh, any book.
Rapid fire.
Wow.
So it's a one-word answer.
Rapid fire. Oh man, I'm trying to see. I mainly read audiobooks. The last book I read was called, I think it's called Blue Ocean, something like that. It's really about building long-form business relationships by really getting to know your customers and people.
Okay, your favorite movie?
Ooh, I like Heat with De Niro and Pacino.
De Niro and Pacino, the first time they were together. Yeah. What kind of car you drive?
No car. So I had a Mercedes, but gave that up to go travel the world and just Uber everywhere.
Nice. I'm thinking of doing the same. I'm kidding. I'm in Winnipeg. We can't do that, but I would if we had a great infrastructure. Your favorite sport?
Basketball.
And your favorite team?
No team. I like players. Wherever they go, I go, I guess.
Did you ever run a lemonade stand as a child? Were you always an entrepreneur, or is this were you more of a data guy?
I've always been an entrepreneur, but no lemonade stand. Early on, I was a web designer. Began by building a website for my uncle's school.
Neat.
And this is history, I guess.
I would pick up empty bottles, and I'd get 5 cents or 10 cents for them. I'd walk up and down the ditches in my hometown of Marchand, Manitoba, 5 cents at a time. Walk a whole day, you make $1, maybe $2. It was fun times. All right, this is great. So reminder, guys, I'm Rob Tatro from robtatro.com, portfolio manager here, Canaccord Genuity Wealth Management, and at the Tatro Wealth Advisory Group. If you want to chat about your finances, your personal situation, your investments, go to www.speaktorob.com. Please take a sec, subscribe, press the red button if you're on your YouTube, LinkedIn, Twitter, Facebook, Instagram. I'd love to have you guys subscribe. We put on great content, great guests like the one I had today, Ian. That was a real fun for me. I got to learn a lot. I really enjoyed reading the stuff about you. I love the story about the 2.5 million loss, and I know it sucks for you, but you know what? You're wealthy enough. You've made it back. That's just a fantastic story. I love the fact you gave us a couple names today. We'll keep those on our radar, and I'll diarize my calendar for 2030, and I'll see if Ethereum has passed Bitcoin. as the number one rank. Ethereum's at 44 billion in market cap today. Bitcoin's at 241. So it's got a ways to go, but you heard it here first. Thanks so much, Ian, for the time. Thank you for all the viewers.
It was a pleasure, Rob.
And I appreciate you taking the time. We will see you all next week here. Who's my guest next week? I forget, but it's a fantastic guest. I'm thrilled to have him or her on the show next week. I should know this cold. But anyways, thank you so much, Ian. You have a great day and enjoy the rest of your week.
Okay. All right. Thank you. Take care.